For me, this is very classic of a bear market rally. And that's why I'm a little skeptical. I had some longs going into this. I was talking about a potential breakout. We've gotten that. But I always said it would be a breakout that would get bulls to kind of jump back on the ship. But it probably is a shorter lived bull market run, intra bear market, right? So let me show my charts here because I think there's some cool things to look at. So, number one, if we see this chart here, right, this is the bull run that we've just experienced. Incredible, right? I mean, we haven't experienced this in quite some time, but number one, I mean, it looks big, but if we zoom out on the chart, I think it's important to keep it in perspective, right? This is what we're talking about. This is what's getting all the hype, is this move up in Bitcoin. And again, like you said, very normal because people had been kind of lulled to sleep with no volatility. I think we had the lowest volatility in Bitcoin history. So it was kind of dictating something would wake things up. But again, you have to look at, okay, this is the down market and this is where we are right now. Is it anything yet to get excited about? And I'm going to tell you where I'm going to get a little bit excited. If we were to take out this high right here, which is the beginning of the FTX collapse, where we saw FTX, and all the fraud and all that come to light, 64%, 50%, and then even down here, you're at 18%, where it's, here we are with Bitcoin up, what, 25, 30% off of the lows. I mean, that kind of falls right in the midst of these moves that we've seen in Tesla. And I do liken Tesla and the type of people that are investing in Tesla as the same that kind of get involved in Bitcoin and kind of have that mentality. So I think it's important. You could look at any stock. I mean, you could look at Apple, Amazon. A lot of them have these bear market rallies where they jump 30, 40, even 50%, but then ultimately find themselves making new lows. And so I would just caution people out there. Yes, yes, it would be great to know that Bitcoin has made a low pivot and maybe we're starting to head up, but I wouldn't get too excited just yet.
Yeah, there's just no conditions, conducive for a market reversal right now. It's just because Bitcoin is on the risk asset level like everything else. And I mean, the Fed is going to tell us when it's bull market on, and the Fed
Right.
has said the opposite. So you can't believe the Fed, follow the Fed, and bet on the Fed on the way up, and then completely ignore them on the way down. Albeit, I think a lot of the markets and a lot of the institutions out there are still doubting the Fed's resolve. So we're kind of in
Yep.
that cat and mouse game. And, if you go back to Bitcoin, zoom out and look at Bitcoin from the peak, Bitcoin's had, 40, 50% rallies or more since the peak. I mean, back in
Yeah.
June, it had a 40 something percent rally up there at the Do Kwon.
Done coming into January. So you have those sellers kind of going away. And then you also have the fear about FTX and kind of the shorts that we're building there as well, saying, oh, this is going to crush. I mean, I can't tell you how many times I went on interviews in the last 3 weeks and just said, Solana, yeah, I mean, it's absolutely potentially could go to zero, but there's a trade here. And the trade is very simple. It's that, you have an $8 coin that could go to zero. So you're risking $8, put 2% of your portfolio in it, but it could also go up 300%. So it's like a risk reward assessment. And obviously we see here what it ended up doing, but yeah, it's super fun to trade this market.
It is, it is. And this is all. So if you look at Bitcoin, Ethereum, Solana, all the major altcoins, in conjunction with Bitcoin, they have look at that, the exact same price action pretty
Yep.
much. And this is a lot of this is manipulation. I mean, Binance is pretty much the only game in town. All the market makers are working with them. They see your trades. If you're posting shorts, longs, they see your book. So they're just
They
liquidating
do.
you and wiping you out. And, when you go to the traditional markets, though, you don't see that. You don't see identical price action across.
Economic recession where asset prices, because the companies will earn less, are going to have to go lower. And that question is how much of that sell pressure in the stock market trickles in to the crypto markets.
Yeah. Let's take a look at the S&P real quick while we got you in NASDAQ maybe.
Yeah, so I've actually started accumulating shorts on the S&P. I wouldn't call myself all in on my positions yet, but I'm in the camp that, I mean, we could go a little bit higher, but I do think that we're in a position here where we're going to see a bigger drop in the S&P. And I think this is, again, the same kind of thing. You're getting this asset kind of re-risking, if you will, people taking risk again, but we're now into some key levels on the S&P where I think you're about to see a bigger rollover and probably still trading down. I think this year at minimum, we hit this 3,400 level. And then I think we could go down to this 3,000 level by late this year in 2023.
Yeah, yeah, I definitely think, if nothing, a retest of those lows, and that probably is not going to hold. And I mean, every time we've tagged that trend line, it's put it in a new lower low, and the VIX is down around 18. I don't know if you trade the VIX or watch that at all. Not trade it, but use it.
Yep.
The VIX is down where every time it gets to that level, we put it in a new low. this repricing and balance to happen. But I don't know if we'll ever really get a balance in the labor market. That's just a very different beast right now than we've ever seen or can even understand.
Yeah, no, it definitely is different than we're used to. But I think the most important thing to keep in mind is that, the average investing age has dropped significantly. You've had so many new young investors coming in the market, partially through crypto, partially through meme stocks and trading that. And again, this all happened during COVID and work from home and money being piling up because people didn't have to go to work and all this stuff. And I think you have to keep in mind that the average investor has not experienced, a long bear market in stocks. And that does concern me because it makes people think that, oh, yeah, maybe we'll have a dip, but we'll roar back to all-time highs in 6 months. And ultimately, you've been through, 2008, 2009. We've been through the dot-com collapse. And it's not, there's at some point a reckoning period where we're going to really have a reset here.
Especially without the Fed. I mean, we are in an environment where the Fed says we are raising rates. We're not bringing rates down. We're not stopping. We're not pausing. They're going to slow.
And the fact that it couldn't break, that finally was telling you that there were too many buyers down here, and then markets began to go up. But yeah, I mean, you could see that low there and how it kind of triple bottomed there, if you will, and it just couldn't break, and that began that next bull market that took us into 2007.
Yeah. Take a look at NASDAQ from 2001. Let's see what that looks like.
Here we go.
So that's a little different animal there.
Yep. Yeah, so this one again, here was your dot-com bubble high, which was again right underneath 5,000, and then we bottomed out. And this is the part that, for me, when I look at the dot-com rally, it's very similar to what you see in the charts now. And it, being someone who's been through multiple cycles like this and not just zero cycles like so many investors, you have to be a little wary. I mean, to see a market drop from 5,000 down to 700, 800 on an index like the NASDAQ, I mean, that's pretty scary.
Yeah. And that looks like most tech stocks right now and most of crypto, including big bull market. But I just don't see it right now with the Fed continuing to hammer at the markets. And they're going to come out next week and they're going to be talking tough after
Oh,
what they've
yeah.
been seeing.
And I think that
meeting.
point is such an important point to make, is that the Fed does not want to see crypto rallying back strong. The Fed does not want to see the stock market up significantly. In fact, I think it was 2 meetings ago where the initial statement from the Fed came out and the markets ripped up. And then Jerome Powell went to his press conference and he just said you could see him almost like looking at the market on his phone and then being like, oh, I don't want to rally. And then he just hammered the markets and then the markets collapsed below that. So just keep that in mind, is that to get inflation under control, you can't have asset prices ripping higher, because the wealth effect takes over and everyone feels wealthier. They'll go spend more money, creating more issues.
Yeah. And again, for the average person watching, they might be, who cares what Powell says? Who cares what Fed says? This is crypto. It's risk assets. The big money that moves the market are watching and listening to the Fed. So when we say that, that's what we're really meaning, is that until the markets believe fully where the Fed